future. We're talking real money.
Well, it's the Talking Real Money podcast. It's the podcast that becomes a podcast. It's not even a show. It's just a podcast. For all of you out there who like listening to podcasts, and you're legion. There are a lot of people who like podcasts. I'm Don McDonald. This is the Talking Real Money podcast. Over there is Tom Cock, and you're wherever you happen to be with your earphone thingy in, your AirPod, your headphones, your car CarPlay or Android Play going, whatever it is. Whatever you use to listen, we appreciate you listening. And we want to spend a little time today on a topic that we believe gets way, way, way more interest than it deserves. And there's a reason for that. The fact of the matter is that this is a thing that people think of as an investment that has been around and been popular for a long time, primarily because there was an agreed upon value, and compared to carrying a 100-pound sack of flour, it was easier to trade a 100-pound sack of flour worth of this stuff, and so people used it for trade. Today, it's still a popular product. I keep trying to avoid calling it an investment. And what are we talking about? Well, all that glitters isn't gold.
Yeah, and if you've been at Costco on a Saturday morning and you've been rushing in for the 15 pounds of mayonnaise or the rotisserie chicken.
Oh, gosh, love the rotisserie chicken.
You haven't had to use your elbows, but if you've been looking for the 1 ounce gold bars, then yeah, you got to break your way up there, because if this is to be believed, Costco is selling $200 million a month of gold, which sounds like a lot to me. I don't know how much gold there is I got a little bit on my finger here, none in my teeth, but gold has been a red hot asset class. I'm with you. I hate to call it an investment. Up 13%.
That's why I'm going to call it a product.
I like a product. Trading it to $2,300 and $22 an ounce. But why? Let's talk about the whys. Why is gold trading higher? Why do people want to run out to Costco and buy gold, et cetera, et cetera? Well, okay. We live in, I guess you could call them, even though historically I wouldn't call it outrageous, inflationary times. And gold is viewed as an inflation hedge. That's one. We live in, I guess you could say, uncertain times, even though I think if you step back and look at the big picture, I would be my take. Like, it's not a world war. It's not a Great Depression. I mean, there's all kinds of times and not that far past that were certainly much more difficult. Yeah, worse.
Yeah.
And gold is pitched as an ultimate store of protection against calamity, which I think, frankly, is dubious at best. Because if you have gold and the world comes to an end in some way and you want to buy that rotisserie chicken, might be hard to do. Scraping that off.
Costco won't even take the gold bars back.
I know. We'll talk about that in just a minute.
Which is one of the problems with buying.
Yeah, and we'll talk about getting your money back from gold. Here's a number to pay attention to. Gold has underperformed equities over every 10-year period for the last 100 years. Every 10-year period. Gold does have a chart that kind of goes straight up, straight down. Why? Yeah. Why would that be? Well, gold is simply worth what the next person says it's worth. There's no earnings, right? There's no dividends. There's no growth. You put it in a closet, you come 5 years later, same amount of gold, right? And
it's hard to spend. It's hard to spend.
It is hard to spend.
Wow, it sounds a lot like crypto.
I was waiting for you to come there with the crypto hater. So it all comes down, frankly, when it comes to gold, to psychology, right? It just makes some people feel better. I hate reading these stories about young people that are rushing into Costco to buy these gold bars because they feel like the world is headed in a bad place. So I want to have gold, which I don't think it's going to help you that much. And frankly, if you're 30 years old and you're buying gold for the investment, looking back over the last 100, as we just said, has not been a great product? Is that what we're calling it?
It hasn't. It hasn't been a great investment. So we can say it has not been. It has never, ever, ever, ever been a good investment. If you define investment as something that can grow more valuable over time, can and has.
And this is the part people overlook in these minor little moments where it sort of glitters, as you said, and then fades, and then glitters, and then fades. But here's the other part that I think people have kind of forgotten about in the excitement of buying gold, and that is selling gold. Because
it's not. That's why it's not fungible.
Exactly.
It's a non-fungible token.
Didn't we have that recently too as well? It's just not very liquid. Token. So if you're trying to unload it, it says the primary options for face-to-face deals are pawn shops and bullion dealers, which unless you're a good negotiator, that's not a place I want to go in and try to sell something, right? Because they're pretty good at negotiating a better deal. One investment officer said that investors can expect their gold to immediately lose 5% of its value because the premium you paid and the fact that they need to resell it someplace. Maybe you do it online, but then you got to pay for shipping. Maybe you store it somewhere. That cost to it. I mean, so there's all these other aspects that make it different. Okay, but then there's these people that this drives me nuts more than anything else, Don. Mm-hmm. I don't like it for young people that think there's going to be some great store of value for the long haul. And because it's not going to grow much if history is a guide. But then there's advisors who say, all right, well, you're really going to have gold. Okay, no more than 5% of your portfolio should be in gold. Now, these are the same people.
I hate that.
I do too, because it's pandering. These are the same people that will tell you, well, there's another one on the radio that we actually respect who says, yeah, you sound old when you don't say, okay, go ahead and buy 5% Bitcoin. So, okay, so now you have 5% in gold, 5% in Bitcoin. Well,
my ego's not that fragile.
But 5% of those. Oh yeah, I guess alternative investments. You can put 5% in that. After a while, I hate to break it to people like this. You keep adding 5%. All of a sudden, a lot of your portfolios in these sort of alternative, non-investment investments. Right? You end up with a portfolio full of this stuff that frankly is
5% here and 5% there. Pretty soon you're talking about real money.
You have to. I mean, because that's like, doesn't take that many. It's only 25% and it's all of it, right? I mean, so I just dislike that overall philosophy where they're going to tell you, okay, you really have to have some, don't have more than 5%, right? It's okay to have some of that, but it just has not been a long-term play. It is a psychological investment. It's complete.
Use the I word again.
Can you call it anything but completely speculative? Because isn't it truly just what the next person says it's worth?
You know, here's the thing I love. I love more than anything facts. I love facts, actual numbers, like data, that kind of stuff. And when you look at gold adjusted for inflation, and let's just stick with modern times, shall we? I mean, it fluctuates. It fluctuates up and down. But adjusted for inflation, gold is at the same price it was in 1979, 1980. As a matter of fact, its all-time inflation-adjusted high in 1980 was $2,700 an ounce. So adjusted for inflation, if you bought gold in 1980, and held it until 2024. That is 44 years, right?
It is.
You've lost money after inflation.
That doesn't sound like an investment.
No, it doesn't, does it?
But
as a matter of fact, even though gold is up, it was on an inflation-adjusted basis, it was worth more in 2011 than it is now.
Which is not that long ago. But for those of you looking for some good news, you gold bugs out there, that
There's
really
good news.
Yeah, there is. Yeah, some of this from an article. Some of gold's
article. It's not my opinion.
I'm not going to. No, this is not my opinion. Some of gold's strongest performances have come during Fed cutting cycles. And if the Federal Reserve actually does start to cut rates, maybe you're going to be And then here's Kevin
Okay.
Dunleavy, an advisor at Freedom Financial in Orlando, Florida, Don, right up the street. He says,
wait a minute, Freedom Financial? I think those guys do like free dinners or something. I'm not sure.
Well, maybe you should get one and ask for the gold. He says, if you wanted to diversify your portfolio with some gold ETFs because you have a thesis or have some fear, okay.
No, it's not okay.
That is absolutely no reason to buy anything you think is an investment, ever.
I think it's going to go up. So if I think it's going to go up, I should buy it.
And if your emotions tell you to do something, should you do them when it comes to your money? I think not. With any emotion. That's a bad idea.
And by the way, that argument about interest rates, well, actually, gold hit its peak. Hit its all-time peak ever, its highest price ever, when interest rates were 20%.
That was 1980, right?
When the Fed started cutting,
the
value of gold plummeted.
Okay, I just said it's an article, not my article, not my stats, not my people, not my advisor.
Get this, from that high of 2,700 adjusted for inflation.
Yep.
By 2001, gold dropped from an adjusted value of 2,700 to an inflation-adjusted value of $475.
Wow. There's something to pay attention to. So, please, at Costco, I'm okay with the large quantities. I think you mentioned flour, mayonnaise, even the chicken, which I like, but not the gold.
And by the way, just so you know, they turn the leftover chickens into.
I probably don't want to know this.
No, it's really good. They cut them up, they chop them up, and they make a roasted chicken enchilada thing in a big old pan.
That's where those chicken comes from. Okay, I've seen those enchiladas. But it would take me 3 weeks to eat that.
Well, what we did is we cut it up and froze chunks of it.
Oh, okay. All right, fair enough.
Really good. And the other thing that they make sometimes, I haven't seen them in a while, is this gigantic chicken pot pie that is to die for.
Can you do that with gold? I'm thinking not.
Gold pot pie?
It's chew a lot.
The problem is it's not even the chewing. It's that soon you end up with no teeth.
Then you need more gold in your mouth. So, all, as you said, that glitters is not gold. All right, time for questions here on Talking Real Money. You could send them in. You can write them. You can talk them. Mm-hmm. You can you use smoke signals? I can never remember if we've gone that far.
We got rid of that. That was really ineffective.
Hard on the environment.
Incredibly ineffective. It really never even caught on much. The Telegraph sort of usurped it.
See, I had a fire last week. It was great. All right, here we go. Not in my house.
Fire in his belly.
Yeah, I loved it. All right.
Gold. He needs him some gold.
This comes from TJ in Stillwater, Minnesota. Is that near your travels, by the way, Stillwater, Minnesota?
Okay, hold on. I got to look it up.
So Don's planned trip is now up on the interweb. You can go to talkingrealmoney.com. It comes right up on the homepage. It's really cool. You got the silver bullet there. You got the map. So send him a note if you're near where he could be driving, and maybe he'll drop by for some free s'mores or something. Speaking of fires.
Yeah.
Anyway, Stillwater, Minnesota. While you're doing that, I will I'll ask the question. Yeah, TJ says, I asked a question about my wife's 403B. Your detective skills were commendable. But she does not teach in the same district where we live. Per your advice, I went to 403B Wise, but they don't have any info listed. She is with the Stillwater School District in Minnesota. Is there any other place to find out if Educator Finance Services is quote unquote good? Educator Financial Services. It sounds cheesy to me. It worries me. It just does scare me.
Wait a minute. So hold on. Minnesota.
Stillwater, Minnesota.
Stillwater.
Wasn't that the fictional band in the movie?
I found it. Stillwater Area Public School District.
You found the plan?
Yeah. But they don't have information. They haven't been able to get information. If you have details, they're asking you. So if you live in Stillwater, Minnesota, and you have details on the plan, they have a form you can fill out and list the vendors And he said it was Educators Financial.
Yep. Educator Financial Services.
Yeah, Educators Financial Services. I just found it.
It just sounds like there might be an insurance product linked to it, but I could be wrong. So,
well,
I hope that we are.
EFS.
EFS.
They're
That's
out
correct.
of Minnesota.
Okay.
And by the way, Stillwater's east of Minneapolis, where I will be in Minneapolis.
There you go, TJ.
Because I
Get
got a
on the
bunch
site
of
and tell
friends
Don.
there.
Yep, there you go.
And let's see what their find an advisor. Yeah, let's see. Retirement investments, insurance strategies. Let's see. Educators from EFS 403B. Let's see what they have. Okay. Oh, they have brochures. Let's see what they have in their brochure. Boy, it is tough to find information. Oh, yeah. Okay. Security benefit. That's insurance.
Yes, it is.
Fidelity. It says Fidelity. Let's see what Fidelity they have. Okay. Not terrible. Fidelity. Oh, no. Those are the Freedom Funds, though. Those are the pricey ones with the big fat expense ratios. Let's see if they have any. They have a Fidelity. Can that be right? Okay, that's right. They do have some index funds. Yay!
All right, so you got to make sure you use those instead of the insurance products.
Exactly.
Yeah,
they have an emerging. They have an emerging markets index at 7 basis points, 7/100.
Wow, that's good.
They have They have a S&P 500. They have a sustainability index. They have an international index.
There you go.
At a little expensive.
They got to have an S&P 500 index.
They have an S&P 500 index.
You can build a nice little portfolio there.
They have a lot of funds. Total market index.
You could do that there.
They have SFKAX.
San Francisco CAX?
Yeah, FS CAX. KAX.
Okay. All right. There you go.
Small cap index,
Okay, so Educators Financial Services has some good
Fidelity
options.
funds.
You just got to pay attention. That's all.
And the advisors are probably not going to steer you toward those.
Let me guess. No, because they don't make any money on that part of the transaction. Yeah, none. That's good.
Not at 2 basis points.
And TJ, go to the website, or anyone who lives in the greater Minneapolis area, and tell Don, come on by.
Yeah, and the other thing is go to 403B Wise and get the paperwork from the employer and help them out by putting it in there.
Yeah, because it relies on the individuals to put those up there. They don't have a staff that does that. That's good. By the way, you're going to be giving away the chicken pot pie on your travels or the enchilada? Which one?
No, I'm not giving away food.
Oh, okay. No food.
No, I wasn't planning on giving away food.
I'm trying to find a reason for people to come and see you.
There is no reason.
Okay.
Other than Debbie's sterling personality.
There's that.
Actually, no, more appropriately, Debbie's golden personality.
Yeah, sparkling and golden. I'd say that's true. All right. This from David in Sammamish, Washington. Will you be going by there on your trip?
I'll be parked in your backyard. That's
okay. Close enough. That's true. Okay. It says, my son is starting college next fall, so we're close to needing a lot of cash. We have a 529 for him, an inherited IRA. This will be year 4 of the 10-year required distributions, a taxable brokerage account, a single company stock from a former employer that I've been steadily divesting each year. In what order should I pull funds from each? Which one? Where's it come from?
Give me the list again. We got the taxable account.
You got 529, inherited IRA, taxable, and a single company stock.
Well, the inherited IRA has a 10-year drawdown.
He's already on year 4, so you're going to have to take that money out, pay tax on it anyway. So that's already
you're going to have to take. But the because the 529 could even be used for grad school.
I was going to say I might even be tempted to wait on the 529, take from the inherited IRA, single stock, and taxable.
IRA has to come out. Has to come out.
But you could balance all those things out for reasons of taxation, because remember, the money coming from the 529 is going to come tax free. Right. The inherited IRA is going to come at your regular income tax rate. The taxable brokerage account is going to come at a capital gains tax rate. Same with single company stock. So you could take a look at each one, figure out how much you need, figure out from each one of those accounts the most tax efficient manner possible.
Yeah, but I would really be tempted to, because it's 4 years of college and you got 6 years to get that IRA out of there. That should be priority one, probably.
Yeah. He also adds, love your show and love Pompey wood-fired pizza. Please keep coming back to the Sammamish Farmers Market. Wow.
Oh, did she go to the Sammamish Farmers Market?
She has many times over the past decade and a half.
I'm telling you, your bride makes a mean pizza.
That's a mean pizza.
That is one heck of a pizza. No,
right.
Really, truly, I'm not just saying that.
All right. You're going to get your shot at it, so you're going to have a play.
Is the pizza oven going to be parked out next to the trailer? So
there's one right there right now. I've ordered it moved, but you know what that means? Nothing. Yeah. Oh, yeah. You and I can light that baby anytime we like.
I'm just going to sit out in the backyard and eat pizza. Can I do a salmon pizza? Ooh.
She's done salmon pizza.
That sounds really good.
It is good. Yeah. Well, I think it has white cream cheese on it or something.
And some capers.
It did have capers as well. You're all over it, man. Yep. Look at you. Great pizza designer you are.
Right.
Hey, listen, before we go, I want to mention, talked to a lot of you the last couple of weeks, still have additional Saturday mornings. Got other advisors happy to talk with you.
New Saturdays during the week? You only have one Saturday morning.
Doggone it. That's a problem, but we'll see what we can do. Go to talkingrealmoney.com and click on Meet an Advisor. We give you help. We look at your portfolio. We talk about your retirement plan, all that stuff. That's all free. Just gave someone some great suggestions today, like go do this, this, and this. Get on with your life. Other people look at it and say, I really need more help. Can you write a plan? Can I hire you, et cetera? But guess what? Have that initial conversation to get things right. TalkingRealMoney.com. Click on Meet an Advisor. That wasn't too much of a push there, was it?
No, that was good.
Okay.
It wasn't pushy. You're not pushy in those meetings.
No, we're not.
So thank you all for being out there and listening and telling your friends and doing all that voodoo that you do so well. We really appreciate you being there, and we hope you'll keep listening for a very long time, as long as these two old guys keep doing this stuff. Keep hanging out 3,000 miles apart until August, talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.